Welcome back to a brand new explainer on the Gap Advisors Ind AS Clinic YouTube channel. I'm absolutely thrilled to have you here. Today, we're putting on our detective hats to break down a fascinating real-world accounting reality. We've got a classic case of what happens when a company's stated accounting policy totally misaligns with the strict rules of the Indian accounting standards. It's a brilliant example of why reading the fine print is literally make or break. Okay, before we jump into the evidence, let's quickly set our baseline. For today's discussion, our functional and presentational currency is the Indian rupee. So any other currency is treated as foreign. We're looking at a standard reporting period from April 1st to March 31st. Also, keep in mind, the views I'm sharing here are personal and not legally binding. Always seek out an expert before taking any action or deciding not to take action based on what we discussed today. Here is our roadmap for the day. First, a quick welcome to the clinic. Then we'll dive into the revaluation rulebook, followed by spotting the compliance gap. After that, we'll look at the equity disconnect, discuss why accuracy matters, and finally, show you how to expand your Ind AS knowledge. Section 1. Welcome to the clinic and the Suomoto investigation. This whole case started when Gap Advisors downloaded and independently reviewed the published Ind AS financial statements of a listed company on a Suomoto basis. Moving on to Section 2, the Revaluation Rulebook. Understanding Ind AS 16. To really get why the error we found is such a big deal, we have to look at the rulebook. Paragraph 39 of Ind AS 16 is absolutely uncompromising. It explicitly dictates the path a revaluation surplus must take. It says, if an asset's carrying amount goes up because of a revaluation, you've got to recognize that increase in other comprehensive income, or OCI, and then accumulate it in equity under a very specific heading, revaluation surplus. So think of it as a mandatory three-step journey. Step 1, the revaluation increase happens. Step 2, it absolutely must pass through other comprehensive income. And Step 3, it finally parks in equity, distinctly labeled as a revaluation surplus. This is a highly controlled, transparent pathway designed so anyone reading the financials can clearly track these non-operational gains. You simply can't skip a step. Section 3, spotting the compliance gap, the company's error. When you look at the standard, right next to the company's policy, the gap is glaring. On the left, Ind AS 16 clearly says, recognize the surplus in OCI first, then into revaluation surplus. But check out the company's published policy on the right. They explicitly stated they recognize the revaluation surplus directly in other equity as a revaluation reserve. Do you see what happened? They bypassed other comprehensive income entirely and dumped it straight into other equity. Their policy for property, plant, and equipment revaluation is just fundamentally out of sync with Ind AS 16. That brings us to Section 4, the equity disconnect, ripple effects in Ind AS 1. You know, a bad accounting policy rarely exists in a vacuum. It almost always creates a domino effect of reporting failures elsewhere. If this company claims they put this surplus into a revaluation reserve under other equity, you'd naturally expect to actually find that line item in the statement of changes in equity, right? Well, compounding their first mistake, when Gap Advisors checked the other equity section, the revaluation reserve was nowhere to be found, completely missing. So their presentation actually contradicted their own flawed policy, which is a direct violation of Ind AS 1. So the conclusion here is pretty cut and dry. By skipping OCI, mislabeling the surplus, and then failing to even show that reserve in the equity statement, these financial statements failed the compliance test for both Ind AS 16 and Ind AS 1. It's a double whammy, a failure in both measurement routing and presentation. Section 5, why accuracy matters, protecting your decisions. You really have to stop and ask yourself, are hidden accounting errors like this distorting the financial reality of the companies you trust? If you're an investor, doing a deep dive into Ind AS compliance can be the deciding factor in whether you buy, hold, or sell a stock. And for auditors, missing a compliance gap this obvious could have serious professional repercussions. So, how do you protect yourself before you sign off or invest? Get those financial statements reviewed by Gap Advisors. You can just shoot a near-final PDF over to info@gapadvisors.com for an independent review. Or if you're stuck on a complex Ind AS or IFRS issue, you can actually book a one-on-one consultation directly with the author on topmate.io. It's an absolute game changer for getting instant clarity. Finally, Section 6, expand your Ind AS knowledge, the ultimate toolkit. If you want to dive deeper, you've got to check out gapadvisors.com. They host an incredible repository of over 4,500 resolved issues covering Indian accounting standards and Indian GAAP. Anyone can register for free, submit an issue, and get a detailed response delivered right to their inbox. This is incredibly useful for auditors who need rock-solid documentation on how they tackled tricky Ind AS applications. In fact, the brilliant observation we broke down today was originally featured in the 236th edition of the GAAP Advisors Task Weekly newsletter. It's authored by C.A. Manish C. Iyer, director at GAAP Advisors, and it goes out regularly on LinkedIn. With over 230 editions published so far, it's a must-read. If you're on LinkedIn, seriously, go subscribe for free right now. And definitely connect with the rest of the ecosystem. Follow the GAAP Advisors Ind AS Clinic channel on WhatsApp to get instant pings on new explainers, podcasts, resolved issues, and standard updates. Plus, if you want a true deep dive into today's case study, look up the GAAP Advisors Ind AS Clinic podcast on Spotify, Amazon, or YouTube. I'll leave you with this final thought. Is a hidden accounting error right now distorting your financial reality? Mastering the nuances of Ind AS 16 and Ind AS 1 is your best defense. Thank you so much for hanging out with me today. If you got value out of this explainer, please drop a like, leave a comment, and make sure you're subscribed to the GAAP Advisors Ind AS Clinic channel if you aren't already. And hey, share this explainer with your network, your contacts, audit and finance teams, and definitely CA students. Let's spread this knowledge together. Catch you in the next one.